begin with the overview of the accounting process. What are our source documents from which we get information? Usually, when we purchase goods, there will be a bill on the basis of which we make payments for the purchases. Bill which contains the details of the goods we have received, etc. Similarly, when we make a sale, we give a bill or an invoice. These are documents, source documents, on the basis of which accounting entries are passed, on which economic transactions, business transactions are recorded in the books of account. When we receive payment, we will issue a receipt. When we make payment, we may demand a receipt. So these are certain documents, source documents, based on which we will record the business transactions, the transactions of financial nature which occur in a business. First, the entry, any transaction is recorded in what is called a journal. How is it recorded in a journal? By following the rules of double entry. We shall discuss that in detail later. Once they are entered in a journal, how is it entered in the journal? In a chronological manner. That means according to time, according to date. Date-wise they are entered in a journal. Next, we need to classify them. It would not be possible to go through the journal and find out how much of purchases were made, how much of sales was made, how much is owed to Mr. X and how much is receivable from Mr. Y. So transactions relating to Mr. X have to be put in one place. Transactions relating to Mr. Y have to be put in one place. All transactions relating to purchases have to be put in one place, etc. Basically, we have to classify, and that is done through the ledger. So we have a journal, we have a ledger. This is a book of original entry, and here we have a classification. We had a recording here, we have a classification here. Next, we go on to the trial balance, where all the ledger account balances are in a summarized form given to us in a sheet of paper. We make a statement containing all the ledger account balances so that at one glance, looking at one sheet of paper, we may know what is the total sales for the period, the total purchases for the period, the total rent for the period, the balance receivable from X, the amount payable to Y, etc., etc., etc. So trial balance is what is called a summarization, a summary sheet. Having got the trial balance, we will then move on to the preparation of final accounts. What is the final accounts? Would largely consist of a balance sheet and a profit and loss account. Of course, we also make cash flow statements. A balance sheet will tell us the total of the assets and liabilities on a particular date, and the profit and loss account will tell us the profit or loss made during the period. Usually, we close our books of account and draw a balance sheet and a profit and loss account at the end of each accounting year, which is normally from April 1st to 31st March of the next year. So this would be how the entire accounting process flows. You start with certain source documents. Based on those documents, we make entries following the double entry system in a journal. From the journal, we classify the accounts in a ledger. And the summary form of all the ledger account balances is a trial balance. That this much we will discuss in this particular session. From the trial balance, we move on to prepare final accounts, the profit and loss account, which will tell us the results of our business activities, and a balance sheet, which will tell us how much we own and how much we owe as on a particular date, as at the end of the year. The final accounts, the discussion on final accounts, we will take up in a later session.